everybody. Max Capital here with Wall Street Institute and Company. Right now, I'm on our YouTube channel, which started recently. So we only have one video so far, a very, very important video that explains how to trade the United States dollar, not just the United States dollar as a standalone currency, but how it in the interrelationship with other currency pairs, which was very key this week since we had the U.S. employment data, NFP. I hope everybody traded safely here, made some money. If you didn't, I'm hoping you took managed losses. Otherwise, here at Wall Street Institute and Company, we don't trade the non-farm payroll because of the erratic market movements and increased volatility, high liquidity areas being broken through. Now, high liquidity areas, that's where we take most of our trades. Mainly, we like to trade when the market is deciphered or decided on a direction whether the market will be going up or down, which is a perfect week to trade United States dollar pairs. Now, this is our Sunday market breakdown. With our Sunday market breakdown, so we basically look at the fundamentals and then dive deep into the technical side. As you know, our strategy, it is 90% technical and 10% fundamental. So with that said, we're gonna go straight to our trading economics so that we can look at our economic data for the week ahead. But before we do that, please go to the subscribe button. Subscribe. You can see we only had 10 subscribers. Thank you to the 72 views that we had since we posted this video 3 days ago. We really appreciate that. We hope you'll stick with us. We're going to do our best to provide you with the best content that is going to help you become a profitable trader at the end of the day. Without further ado, let's look at our trading economics. Our trading economics is just a website that blogs about the financials, the fundamental side of the week ahead. Interesting week. It looks like we'll have a lot of major, unlike last week, mainly the major economic news were based on the employment data from the US on the Friday, but this week looks like we're going to be experiencing a lot of movements in the financial markets driven by this major economic news. So the week ahead, according to Trading Economics, the US, China, and India will be publishing inflation updates for April in the coming week, while first quarter gross domestic product releases from the UK, Malaysia, and the Philippines, and factory production numbers from the US, Eurozone, and India will likely also be keenly watched. So other important economic data fall to include the US retail sales and consumer confidence, just to gauge how much investors are still believe in the United States dollar, Japan current account, and Australia business morale. Now you look at this country as the top countries at the top of the world economy, and the European Central Bank will be publishing its monetary policy as well meetings, while central banks in Mexico and the Philippines will be deciding on interest rates. So now we also have articles down there, the Dow and the S&P 500 notched records. You could see that last week stocks indices basically were going for record highs. But what I'm really interested here is the dollar. The dollar post worst week since November. So the dollar index bottomed around 90.20 on Friday, a level not seen since like February, and recording its worst week since November 2020 reaction to payroll report that showed. So we go through this just to give us a brief idea of what's going on in the market. Now let's dive into the technicals, obviously starting with the dollar index. Dollar index is basically an indicator for market direction for the week ahead. Now, order flow wise, it seems like since May, the beginning of April, we've been on a downtrend. like that, like that. So we're expecting this demand level to hold, but it seems like we're going to pierce through that. Looking at how strong this bearish candlestick is, so we believe these lows might hold. So now this is structure wise. You can tell that we're in a downtrend here, got broken. So this is the base that broke the structure. So expect to test that again before we rally to the upside. Now, with that said, we looked at that on a daily time frame. Now we scale down to a lower time frame to go really deeper with the price action in terms of structure, impulse correction. What we do find out at this point is that because we need to be relevant to what's happening in the current market price. So this is the demand level. We're hoping it's going to hold, but if it doesn't, then we'll be expecting our reversal to the upside down here. So we have this sort of expanding formation right here with the United States dollar index. So I might be expecting this to continue to the upside from here, remember, or from the order block that's down there. By the way, let us know if you want to learn more about our strategies in terms of how do we combine structure in terms of chart patterns and institutional order flow. Now, institutional order flow is the basic of our trading strategy. So we basically like to see where the major players are going before we can commit with our smaller hands, so to speak. So with that said, also inside here, we also had this channel here that was broken, just to confirm that the market was going down at this point. So you can also pattern separate just to understand deeply how the markets are moving currently. So it was broken here, so we would expect it to push to the upside. Now that might be a short-term movement because it seems like we're still looking very bearish. So we might also get to these lows now. So when we do our focusing, we like to investigate the possibilities and the probabilities in the market. Now, according to structure and how we trade the financial markets based on institutional order flow and chart patterns, pivot points as well, we expect there's a high probability that the market will push up from this point, but there's also a possibility that it can go down to this demand level, which was left untested, which was the same demand level that broke structure. Now, with that said, I'd say short term, we expect the United States dollar to gain some strength the week ahead. Now, going into other markets like the US oil, we also trade the US oil. Commodities are a big part of our trading strategy. Now, simply looking at things here from the high time frame structure, we look at the market in terms of the impulse correction. If I'll just make an example on the left hand side, impulse, the corrective phase, market continues, corrective phase, market continues, correction, impulse, correction, impulse. In this case, it seems like somewhere here our structure was broken, but we went back in there, and one would expect that we have a double top, if you may. Sorry about that. We have a double top somewhere on this height, but basically somewhere here. But then there's this demand area here, supply area here, which can be seen right now, probably much clearer on a much lower time frame. So there's this demand level here that was I'd like to believe it was tested at this point, but it is still valid. It's still valid up until now. So with that said, we also have this structure here, which can give us some sort of a pattern and corrective structure. So every time you see this spring-like or compressed price action, so that's basically giving you an idea that we are at a corrective phase, or what other people like to call a pullback. So at the first touch, the second touch, so we'll be anticipating the third touch there. Once again, order flow wise, we've been in an uptrend looking at within the corrective structure. So market goes up, down again, up again, and blah 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 blah. So here, right here at this point, we have what we call an order block, a bullish order block. So we'll be expecting, before we can even draw a pattern inside or pattern separate, we'll be expecting the market to go from here, make a third touch there before it commits to the downside. Now, here's a tricky part about the US oil. Remember, yesterday we were looking at, last week we were looking at the correlation between the dollar index and correlation between the dollar index and other dollar pairs. So now, also the US oil, crude oil, so to speak, it has a relationship with the United States, with the Canadian dollar, even with the United States dollar as well, but more so with the Canadian dollar. Now, Canada is the second largest producer of oil in the world. Now, that means if oil prices go up, it'll also give strength to the United States, to the Canadian dollar, right? So that can be confusing at times. These are countries, neighboring countries as well. Now, with that said, we're going to look at the United States dollar against the Canadian dollar at a later stage. So here, just a little bit right up so that you can get the idea. Now, if the US oil, if the US oil is bullish, so what's going to happen to USD CAD? Sorry about that. It happens. It happens, people. So US dollar against the Canadian dollar. So what would you expect there? Now, we said if the United States oil is going up, the Canadian dollar can strength as well. But in this case, the Canadian dollar is a quote currency in this pair. So that will mean we'll see some bearish movements in the USD CAD, right? So always have that in mind once you analyze US oil, or you want to trade, just a tip, if you want to trade the United States dollar against the Canadian dollar, make sure you've looked at the dollar index direction vis-a-vis crude oil. Okay, so you're probably going to get some nice analytics there that are going to give you an idea about the next direction, right? With that said, just to fix this order block here, the techniques that we use to highlight high probability turning point, please again let us know in the comment section if you want to be involved with our VIP groups, study groups, and join our community. Right, so if we go to a lower time frame, US oil again, looking at it right here, we also have this spring-like formation, that corrective phase. Remember, the market structure wise, the market moves in two phases. It's either in an impulsive stage or in a corrective stage. Impulsive, corrective stage, right? So looking at this price action, it seems like we're at a corrective stage right now. So what we'll be expecting is price to drop here. It's a high probability that price is going to drop to this point, probably make a retest in a corrective manner before it can push to the upside and make a third touch right here at that point. Right now, with that said, overall we're expecting US oil to give us some bullish movements if we go deeper with that, right? So next would be gold. Let us see how the shiny metal works, or what kind of price action I was getting from the dollar. Now, probably for 3 to 5 weeks or so, this pair has been just pushing to the upside. But order flow wise, when we look at it right now, you can tell that since January, we've been in a bearish sentiment, right? Impulse correction, etc., etc. However, looking at current market price, comparing it with what's on the left hand side, we see that we have an order block here on gold. So that order block here, which was tested on this last candle on Friday, and probably the direction is very not likely going to be much clearer on the 4-hour time frame. So what do we have from gold right now? We also have this compressive structure. Also, this structures are very important in terms of giving us an idea about how the market is going to move next, right? So we create borders around the compressive structure. So with the gold, would be expecting it to be bearish as well. So first touch, second touch, probably gonna get a third touch there. One can also draw the structure in this manner. So we had our first touch here, first touch, second touch. So going to a lower time frame, this is what we expect. There's a high probability that gold will basically come back to the regions of 850 before it can move to the downside. Okay, now correlations again. And now gold is correlated to the Aussie dollar. So if the Aussie dollar is going up, gold will go up as well. So that's a positive correlation right there that we're looking at. And now on to the next pair, which is we're gonna skip silver. Gonna come back to dollar, United States dollar against the Japanese yen. Right now, I want us to look at crypto. ETC, USD, Bitcoin. Now, there's been some lot of crazy news, optimism, around cryptocurrencies, but we're gonna make our decision based on structure. So order flow wise, we've been on an uptrend. So here it respected this order block. So we had this impulsive movement, and now we have spring-like structure, which is compressing, showing us basically loss of momentum. Because if you really look at things, we did break this uptrend line. So I would say technical wise, I would expect more bearish movements from Bitcoin going forward. Now I have no idea what's happening on the fundamental side, but this is what the facts are technically, right? With that said, let us follow our normal way of structure, basically structure analysis. So right now we'll look at the most relevant extreme highs and extreme lows. So with that impulse and that corrected structure going to a lower time frame, which is 4-hour time frame. Now we're going to try to connect the lows of our and the highs of our corrective structure so that we can get a brief idea of what might happen next. Now, the language is also very key in when you're trading or when you're analyzing or focusing in the financial markets. It's easy to just say it has to do this, gotta go this way, only to find that the market does what it does, right? So we have to be very careful with that. So with that said, we have this order block here that wasn't tested at this high. So my take at this was the last extreme high that Bitcoin was at. So my take is that with Bitcoin, we have to get to probably 65,000 again, and then drop to the downside. But scaling down to a lower time frame, the last lower time frame that we go to in terms of moving down with price action, still trying to see what's happening, because before the high time frame structure came for me, you find that it will play a bit according to the lower time frame structure. So you have to know what's happening there as well. So yeah, once again, we might still get a movement like this to make it towards the and go to the downside, or it might go up and then make a turn on the upside like that. So anything can happen at this point in time, but I would say long term I'm more bearish on. But looking at it breaking after it broke these highs, one would expect a movement to the upside. Like I said, short term, I mean long term, we're expecting to go down, but short term it has to push up like that as well. So now back to the dollar against the Japanese yen. Interesting week. Actually, if you look at yesterday's candle, NFP, we had this sudden drop. I have a couple of friends of mine in Europe and in the US who caught that move. I wasn't there. As I've said, we do not trade this kind of price action here at Wall Street Institute and Company. Right. Once again, marking the extreme highs and extreme lows. So basically, this is the most relevant ones to current market price, which is here. And then we step down to the next lower time frame so that we can see price action much clearer. And now looking at things right now, we see that we have this corrective structure connecting its highs and lows in the form of a flag, a bigger flag from the higher time frame. So that's what we have. And structure-wise, so here you can see that we're really moving in a bullish manner: high, low, high, low, high, low, high, low, and then we had a break of structure somewhere right here. So my take is that order flow wise, we would still expect price to come back to this order block, this bearish order block, and commit to the downside. Now remember, we're also expecting some bearish sentiments on the dollar index, right? So this is my take on this. So probably break these lows as well. If you do take this trade, this would be a nice risk reward ratio trade. Let's check it out. So if you have your excuse me, your stop loss above that area, you can easily get a 1:5, 1:6 trade, 27 peak stop loss and 160 target profit right there. So it's a nice setup. On to the next one, Euro USD. The most traded currency pair in the financial markets. Now looking at it as well, it's been just going up. It's been going up since, once again, the beginning of April. The beginning of April as well, it's been just going up. But then where we are currently, we're at that bearish order block, which seems like that last candle yesterday did react to it. Now if we go down to the next lower time frame, just to look at things in terms of impulse correction, just to ascertain once again the next possible direction of the market. Now here with this, you mustn't try to force things. Okay, so refining my order blocks, lower, something that I'm seeing right now, that possibly this would be the next Possibly this will be the next turning point. So we have our QML level here. Those who studied Quasimodo is available in our course, just to make sure that we have some more confluence on the confluence or confirmations, whatever you decide to call it, on our supply and demand and order blocks, so to speak. We normally use Quasimodo as well to confirm our entries that will give us those sniper entries that we're looking for. So with that said, we're looking at the the euro against the dollar moving like that. So you can even place your trade here as a sell limit, probably 40 pip stops, and down to those lows, or the 90% rule end here. Nice 446 pip move, 1:11 or 12 risk reward ratio. That will be pretty good trade right there. What's next is the British pound against the United States dollar. Once again, higher time frame. Very, very, very important. So higher time frame was looking at our extreme highs and extreme lows. Now order flow wise, this has been a bullish since November last year. We've been pushing to the upside. Now let's go to the next lower time frame to analyze the market in terms of impulse correction. So it looks like here we connect these highs, we might have something here. I remember talking about this with one of my students. We need to go to 1.4 before we can come to the downside. Now order flow wise, there's that supply area there that I think it has to react from before we can commit to the downside. So now using one of our strategies, once again, you can just set and forget here. Let's look at the risk reward ratio of this trade. Probably a 50 pips stop loss, and remember, risking 1% of your trade shouldn't worry much about that. So 450, 460 pips moves as well. So these are nice setups we'll be expecting to play out. But if you want more details in terms of when do we press that button to just go and make money from this setup, do join us in one of our groups. We also have a VIP group that you can be part of just for only $50 for the whole year. So we send our signals, we send our box and everything. So US dollar, remember on we had said that we are expecting the US oil to gain more strength. So here, this will be the sentiment around the US dollar. We need to see some more bearish movement before the upside can come in, probably to the lower part of this channel that we had drawn here. I don't know if this inner channel is still going to be relevant, but as of Friday, this was the sentiment that we had. Yes, it broke this. Sorry, it broke this sort of flag to the downside. So expect a third touch here, move up and retest the backside of the channel in a corrective manner before it shoots to the upside. Now that is no longer relevant. Now let's look at the pound yen. So this is just the watch list that we have for the week ahead. Pound yen, interesting one here. Well, we had already done some analysis here. So interesting one here. We had this impulse movement and then this corrective structure. So we expecting further movement to the upside. Now going down to the next lower time frame, which is the 1 hour time frame, as a bullish order block here, which we're expecting the market to come down here after making 1, 2, 3 touches at the bottom of this pennant and moving to that upside. Once again, a nice trade, 1:5 risk reward ratio, 24 pips tips stop loss, and 130 pips target right there. Another one that's on our watch list is the euro yen. Uh, Looking at that as well, it's promising to give us some more upside. Order flow wise, we have this order block here. With this order block here, of which we highly believe that price has to come here, down here, before it can commit further to the upside. I don't know if it's going to beat this high. That's the thing about trading. You never know. You just work on acting on your edge, or basically make a move whenever you see that you have more chances of winning than losing. That's the whole idea of trading. So here it looks like we might have, instead of 3 touches, we might have 4 touches. I don't know, but I'll be expecting this to come back to this low before I buy. Pretty much the same thing with the euro yen. You know, I don't know whether it's because I don't know whether it's because this the Great British Pound is still within the Eurozone. Brexit has not yet been concluded, so we'll be waiting on that. So here's another trade. Remember, as long as you can get a 1:3 risk reward ratio, then we believe, according to our strategy and our edge, that's a good trade. That's a good trade that you can risk your money on. So now, lastly, ladies and gentlemen, is the Nasdaq, very famous on this side of the world, which is the southern part of Africa, because of its ability to make traders rich quickly. In the flip side, some traders end up losing money quickly on this. Now we can't close or end this analysis without having a look at it. Order flow wise, we've been pushing up. However, recent weeks, last week we saw a break of this low. So now that's a break of structure. So I would expect this to be a flip zone and have the market move to the downside, probably to this low, or this order block at 13,000. Sorry. Now let's getting our price action on, just to see what's really going on right there, and looking at that excuse me, that might be our corrective structure. And this right here, this order block right here, it really looks like that is where we can expect the market to push down from. So until we get there, we can't really say now it's time. So this is the corrective phase I'm talking about. So already had 2 touches from the top. That's all you need to draw structure. By the way, that's all you need to draw structure. 2 touches from the top. So form of a rising wedge, pennant, whatever it looks like to you. But the thing that we're most particular about is that what phase are we in? Are we in an impulsive phase, or in a corrective phase? So that's what really matters for us. So I would say from here, right here, where it is, we would expect it to push. Sorry about that. We would expect it to push to the upside in this manner, probably play around a bit before it can turn to the downside. Now, ladies and gentlemen, that's it for today with our market focus. I hope we brought some insightful information for you. Please make sure that you do contact us if you want some extra help, if you want to join our community of traders, if you want to be if you want to open an account immediately as possible, you can click one of the links in the description below with our prime broker, with a very good support, regulated brokers as well, that emphasize on transparency, quick deposits and withdrawals, and we have more information on education, etc., etc. Lots of value to be shared on this channel. Please do not forget to like, comment, subscribe, guys. Liking and subscribing and commenting are very key, because that's what's going to help us with the YouTube algorithm, so that we can reach more people, we can help more people get successful in trading. And as this login for the company goes, trade for a living. Have a great week ahead, guys. We love you. Cheers.